Maybe just an extension of one point Andy made as well. He mentioned that sort of some managers move allocations around within their own portfolio. So how are you controlling for that in a multi-asset perspective?
Yeah, so we look at the managers all the time. We understand what they're doing all the time. We actually have an actuary that sits in the business that's put the systems together, so we can monitor exactly what the managers are doing. So we are looking for style drift and things, or taking additional risk that we're not aware of. And we have moved hundreds of millions out of individual managers when they've taken risk that they haven't told us about. But really then also what we're trying to do, one example would be, sometimes examples are the best way of doing this. We see a lot of volatility at the moment. So if we look at how we blend international, for example, international equities, one of the things we did when we did our SAA change, which was October 21, and before that we were looking at, how do we get a very good core manager in there? And it's similar to what you've been saying as well. You're looking for someone that is systematic, so you're not getting the biases that come in there. Getting someone that, when you look at it, you can get very consistent outperformance. Also, someone's not taking large bets. We use a firm, it's one of the managers, Vinva, that is exactly that for us. So getting the right manager in there and making sure that we're tracking what they do. And since we seeded that strategy, they've done about 700 over the MSCI equity since we seeded it. So we've had it for 3 years. So that's a really important one, is getting those blends right, making sure the manager, but then monitoring what they do as well. Don't just, especially when it's so volatile, you need to monitor what they're doing, because they can have that style drift so easily.
And maybe for you, Andy, just in terms of the types of companies you're looking at when you're sort of concerned about an inflationary or recessionary environment, what sort of attributes are you looking for from those companies?
And so here I've just chosen a company because it's relatively well known and I think fairly simple to understand, but it's almost the definition of pricing power, which is Hermes, which is an iconic luxury brand. And on the right-hand side, you can see some of the bags that it's most well known for. You've got the Birkin bag here. So at the top, you've got the standard Birkin at a mere $20,000. And then you've got a limited edition model in the middle, which comes in at around $100,000. And then at the bottom, you've got the kind of bag that's only ever sold at the likes of Sotheby's between $1 and $2 million. So there's certainly something different about a company like Hermes. And what is that? So you break it down, and ultimately, first and foremost, it's those competitive advantages. It's you've got the uniqueness and exclusivity of a brand that has been around for 200 years. You can't replicate overnight a 200-year heritage, of course. What is less well known is how well they manage the whole value chain, from production to manufacturing to distribution. All bags and scarves are designed and crafted by artisans by hand that have had over 5 years of training. It enables you to manage pricing, manage inventory, and deliver personalization, which is increasingly important for higher end of luxury and a great margin driver. And then, of course, it's a family-orientated influence company still, so they're genuinely allocating capital back into the brand, nurturing and protecting that heritage, and thinking in terms of decades and generations. But interestingly, coming to this point around pricing power, when we're thinking about growth and predictability, so the percentage of people and population that's entering the high net worth and ultra high net worth cohort far surpasses the volume of material, particularly their key goods that they're willing to sell. So they're deliberately underselling relative to demand. And that creates at least 2 years of waiting list for most of these bags. That creates a lot of visibility. In terms of pricing, they always price above costs. So for the past 50 years, pricing has been almost consistently in a range around 5 to 7% per annum. And we spoke to a senior director of Hermes a few years ago just to come up with an understanding of what's the absolute number of price that how you think about that. He said, well, it's quite simple. In the first instance, we'll work out costs, and then we'll multiply it by 5, and that's your base case. So there's not many companies in the world that can effectively solve for a margin right from the outset. But as a great indication of price, particularly for any luxury company, is how much things are selling for in the second-hand market. And so Hermes has always got the highest premium in the second-hand market. And it's interesting, if you track some of these bags over time, not only have they outperformed inflation, they've also outperformed the S&P. So I guess a closing thought is that maybe rather than use bonds and stocks to try and protect against recession and inflation, we should all be buying Ferraris and handbags instead.